Hi, everyone. I was just giving it a few seconds there to warm up. Welcome to Tax Tips for Freelancers. My name is Sharon. We're just going to give this a couple seconds to get warmed up because it takes a few seconds for the live stream to pick up on everyone's computer. I was just giving it a few seconds. All right, so welcome. My name is Sharon. I work with Freelancers Union as the Member Engagement Associate. You have joined Tax Tips for Freelancers. This is the perfect time of year to join a webinar like this, as I'm sure you all realize. For those of you who are unfamiliar, Freelancers Union is an international organization of 300,000 independent workers, and membership is completely free. Our mission is to provide a social safety net for members, and we do this through advocacy, education, services, things we can provide for free for members like this webinar. In fact, one of the great resources that we now have on offer is a tax resource center. That's available on our website as of today at freelancersunion.org/resources. And I will bring that up again later in the webinar and remind you about it. So that contains really helpful, useful tips about doing your taxes. And actually, a lot of those resources were produced in collaboration with Jonathan Medows, who is our special guest for today. But before I go and introduce Jonathan, I just want to let you know what we'll be covering. Today, we're going to be discussing the ins and outs of doing your taxes as a freelancer. And this applies to everyone, whether you're new to freelancing or you just want to have a better understanding of how to talk to your accountant. We will try to hit as many of the many topics that exist around taxes, and we will try to take a couple of more specific questions from our attendees at the very end. And this is going to follow a Q&A between myself and Jonathan. And then again, we'll take your questions at the end. So now I'm going to turn it over and introduce you to Jonathan Medows, who is our guest expert. Jonathan, introduce yourself.
Hi, everyone. Thanks for taking the time to listen to Sharon and I today. My name is Jonathan. I'm a CPA. I've been working with freelancers for about a dozen years or so, and this is one of our niches of our practice. I love freelancers because I love to see the passion that they bring to their work. But along with the ability and the privilege of working for ourselves comes a responsibility of filing taxes and paying estimated taxes throughout the year. And if there's one thing that Sharon and I want to get across to the freelance community is that taxes is not just about filing a tax return in April, but really being proactive and planning this throughout the year, inclusive of keeping track of your revenues, your expenses, being aware of what the deductions that are available for you, paying appropriate estimated taxes, and come tax time, hopefully not stressing out too much. So that's my intro. Sharon, take it away.
Thank you, Jonathan. Okay, so we are going to start at the very beginning. I'm going to throw out a scenario, and Jonathan, we're going to pretend that we're talking about someone who's brand new to freelancing. Let's imagine that this brand new freelancer has walked into your office, which is a great start, obviously, because one of the first things you should do if you are interested in freelancing is get in touch with a CPA. Am I right?
Not in March. Not a good time.
So this new freelancer walks into your office. What are the first pieces of advice that you would give them about how to prepare to launch their career and within that file their taxes properly?
So if someone's walking into my office, I'm assuming that he or she is already engaged as a freelancer. So my first tip is be prepared to pay taxes. Don't be shocked, you're gonna pay. How much? Just depends upon your situation. But bottom line, as a freelancer, we never get money back. It's just a question of how much we're going to pay in. My second tip of advice is be proactive. Start keeping track of your revenues and your expenses throughout the year so that come tax time, you're prepared. Know what deductions you can take. Know when you have to not recognize money is being paid as taxable. Know your options. There are different types of accounting systems that are available for the non-newbies. Finally, putting aside taxes just for on the financial side, making sure that you cash flow. Making sure you're stay on top of your accounts receivable, collecting your money, having money for a rainy day, maybe exploring a line of credit. That's my newbie advice. Specifically for my newbies, the biggest issue usually is that they're never cash positive, in the sense that they get a gig, they're starting out, and they're going to have to outlay money until they get paid. So usually the first year or two is a big test to see if we can get through it.
So one thing that newbies are always asking is about quarterly taxes. Can you explain to us why quarterly taxes? When do you have to pay? And what does that mean for your cash flow?
Sure. So when you work for someone, whether you get paid weekly, bi-weekly, or monthly, your employer will withhold taxes on your behalf and remit them to the appropriate federal, state, and local governments. When you work for yourself, you're under the obligation to be the gatekeeper and collect for Uncle Sam and for the state and the cities. The reason why this is so important is because we're on a pay-as-you-go system in the US, meaning the government expects you to pay on a periodic basis ahead of time your tax liabilities. And if you don't, you can have a potential penalty, in addition just to being socked with a huge tax bill.
And what about dates for quarterly taxes?
April 15th, unless it falls on a weekend, April 15th, June 15th, September 15th, and January 15th.
Okay, thanks. So you had talked a little bit about it being very important for freelancers to set up a system whereby they're recording what the money coming in is and the money going out. Do you have any best apps or any suggestions for how freelancers can track those things?
Sure, there are a lot of apps out there. So what I'm saying is not the only one, but a bunch of my clients have been using the Zero Tax Touch, which is a great app where you can download your bank statements, and as you go, you can swipe to identify which business expenses either automatically or, if not, to correct them. There are other type of things out there as well, spreadsheets, more traditional accounting programs. Zero also has a more traditional accounting program as well. So there are myriad of programs. I personally like this. I've been fooling around with it a little bit for ourselves, and I'm really liking it. But, be all end all. I have clients that make their own also. So you're not constrained by one app. Thank God this is America, and there are myriad of choices, but I really like the Zero Tax Touch.
And what's the point of keeping such good track? Is it really that you need to separate your business and personal expenses?
Twofold, or actually threefold. Number one, you're correct. You have to separate your personal and business expenses. Number two, I'm an A+ type of guy. I like to keep score. Kind of important to know where you're standing. And in situations like my business, I need to compare myself year to year to see, am I ahead of the game, behind the game? Because there's certain times a year I know I should be busy. There's certain times of years that I'm not. So it helps me just for internal management purposes. And finally, when you're working for yourself, you're supposed to maintain books and records. And if you have an audit, that could come up as a potential issue, and you may get an additional fine. So keeping track of your revenues and expenses helps you to keep in compliance with the law. It helps you to manage your own business just for your own mental sanity. And finally, it helps you to prepare for your taxes, because the profit is what drives your tax liability.
What is the, say, number one benefit to having separate everything for business and personal expenses? Do you suggest separate credit cards, separate bank accounts, and why?
Yeah, best practice if you can pull it off, definitely, because in case of an audit, you're limiting yourselves to only those accounts. When you commingle business expenses, if you were to be audited, it may come up as an issue where they may start to probe other accounts. Secondly, just in terms of your own accounting, one account's for business and one account is for personal. There's less work for you in terms of maintaining things for compliance reasons.
That's helpful. Thanks. So I think one of the very particular issues that new freelancers in particular find scary, and this happens to freelancers whether they're new to freelancing or old hat. Clients don't necessarily send 1099s. Can you talk a little bit about what is the 1099 and why people may or may not receive them?
So what a 1099 is, it's something that person who hires you sends to you, and more importantly to the government, so the government knows how much money you're getting paid. That's what's going to drive the government in terms of tax compliance. If you're doing a good job on your books and records, you should care less whether you get a 1099 or not. In some instances, if you have a corporation, for example, some companies will not issue a 1099, or some people may not have a strong enough accounting system that they can figure out who they paid and won't issue a 1099. But as taxpayers, we're obligated to pay all taxes on all of our income and to report all of our income, regardless of whether we get a 1099 or not. So if you really have been keeping up your books and records, it doesn't become a problem. So for example, the apps that I mentioned before, Zero Tax Touch or some other app, that should help you to keep track of your revenue. Where it becomes an issue though is for our freelancers who maybe they're new to this, they've been busy, they haven't really kept track of this. And that's where it becomes a problem, because sometimes you rely too much on these things, and then later on the government will get a record that you may have missed in the mail, and you'll get back an audit letter from the government saying, hey, you reported X amount of income, but we have X plus Y. Please explain the difference. And then you find yourself not only owing money that you weren't expecting, but penalties and interest as well.
Yeah, that I think is one really particularly scary thing that does seem to happen to a lot of people. They end up owing more money than they were expecting. Do you have any advice for how much per paycheck people should be putting away?
Best practice in my book is 30% to 1/3, depending upon how much money and where you're living. States such as Florida, 30% would be adequate. In New York, 1/3, maybe a little bit more if you're making more money would be best, given that we have, as we're based in New York City, there are state and local taxes that really come into play here.
So if I then, let's flip the situation around. If I am a successful freelancer and I'm ready to hire some people to work for me, do I need to issue a 1099 or is it a W-9? How does that work?
So yes and yes. The W-9 is a form where you collect information about the freelancers that you have working with you. First thing you should do before you pay anyone is to get this information. And then anyone who you pay $600 or more during the calendar year, you should be issuing this 1099 to them before the end of January.
Got it.
Don't forget though, it's not just about sending a 1099 to the freelancer. There's also a copy that needs to be filed with the IRS and in some locations, state governments as well.
And this is across the country, same rules?
Absolutely, yes.
Got it. So we're going to move to talk about one of our members' favorite topics, deductions. Are you ready for this?
I'm ready. Can we deduct FIDO?
Okay, so I think one of the most common questions that we hear around deductions are around office space, travel, and meals.
Yes.
First of all, especially if you live in New York, which many of our members do.
Which is bloody expensive.
Sorry?
Which is bloody expensive. Very, very expensive here.
You're either working from a co-working space or a coffee shop, or more likely, you're actually working from home. And that could be a studio apartment. That could be a one-bedroom. You might have roommates. What do freelancers who are, let's start with working from home, do about their office space and the deductions related to that office space?
Well, number one, it has to be a readily identifiable office space. And this is a big issue in New York. It doesn't need to be a separate room. Lord knows we don't have the room for it sometimes, but it has to be a clearly delineated space. If a reasonable person were to walk into your studio, let's say, you would have to say, oh yeah, that area is clearly your workspace. You can't mix business and personal use. Assuming we pass this test, and assuming you do not have any other space available for you to do the work, a couple of caveats, but we'll skip over that for a second, then you can take off the home office deduction. What you do is you take your total square footage and you take the square footage of your office space divided by the total square footage of your apartment. That's your multiplier. And you can take rent and utilities. In addition to that, you can take specific expenses for the home office area, such as you buy a desk, you buy a lamp, you buy a space rug, some storage cabinets. Those things you can also take up 100%.
So it's sort of like if you took a picture and that picture was of your bedroom, but then there was a clear space that was marked off that had your computer and your printer. Is that a home office?
Possibly, yes, because, but you can't have your nightstand in the middle of that.
Mm. And what if sometimes I get in bed and I watch movies on my computer from my home office space?
The beds, unless you have certain occupations, is usually not a tax deduction.
Oh, okay. But if I'm using the computer for things that are not office specific related?
So then what you should do is take a percentage for business use.
Okay, a percentage. So you have to be careful.
And study, be honest, be reasonable. Again, always work with, Kate, I always work with the mentality of, okay, if I have to get in front of someone, how do I explain this?
Makes sense. So let's go from office. Oh, so we talked about home office. And what if you are working in a co-working space?
So the membership in the co-working space can be deducted. Now, the question is, if you have both spaces, a co-working space and the home office deduction, may be very difficult to take both. So you may want to take one versus the other.
Okay.
The question then is really, where is your primary space of working?
Got it.
Now, there may be instances where people have multiple offices. Like I have friends of mine that will have one office in New York and one office in Boston. That's okay as well. You can have multiple offices, but you clearly have to show that there are legitimate business purposes in each office. It can't be just merely for your convenience.
Great. So let's move that conversation to talk about travel, because here in New York, a lot of people use the subway, but people may be traveling back and forth from an office that's not in their home if they don't live in the city, or they do. How do you handle travel expenses and deductions?
So travel expenses from your primary workplace to the client is deductible. So for example, if I go from my office here, which is about 2 blocks away from my home, and I go to a client, it's a deductible expense. However, if I were to travel from my office to my home, I couldn't take that as a deduction. That's inappropriate.
Okay. And meals. There are coffee shops everywhere in every city. What if I am working at a coffee shop and I wasn't planning on talking to anyone, but I just happen to have a conversation with someone who's also sitting there drinking coffee about my work, and we exchange business cards. Is that considered a deductible meal?
Possibly, yes. It takes 2 to tango to have a deductible meal, putting aside if we're on overnight business travel. And if you have a business discussion before, during, or after the meal, it may be eligible as a deduction. And especially if you're going to derive business from this, yeah, the more it sounds business-like, the more you're going to be able to get business from it, the more you'd be eligible to take it off.
So do you see any major mistakes that freelancers make when it comes to any of these top 3 deductions?
Yeah. So my biggest mistake is with meals. People assume automatically that anything they eat is deductible, and that's not the case. Just because you're working from your home office and you want to have lunch, that's not a deduction. My biggest issue of travel, again, is really, is it business travel or is it personal travel? Are you going to London for a conference, or are you going for your personal pleasure and just happen to throw in a 10-minute meeting just to try to make it deductible? That's where some of the issues are. And these are big issues, though, in terms of audit, because these are the areas when I have audits that people really get grilled down on. Another issue that I really see, in a couple of topics you didn't mention, is trying to take off clothing as a deduction. It's not appropriate unless you're wearing a uniform or safety equipment. Like, for example, this beautiful tie that I'm wearing. It's not a business deduction. It's something I can wear outside my office, and it's ready wear. It's normal for people to wear it outside the office. And outside my office. It's anywhere.
Whoops, sorry about that. I think maybe my computer just froze for a second. Apologies, everyone. So I think I heard you wrap up that just a few seconds after, Jonathan. And I just wanted to follow up with the question of, well, what if I am going on a trip and that trip is 50% for work, but 50% for personal reasons?
If you can clearly demonstrate that it's for work, then you may be able to take part of it off as a business trip.
Okay.
For example, I went to Disney World once. I took it off as a business trip. It was a seminar for my tax software company. I didn't go to the parks. I went to the seminar. I took off the hotel. I took off the transportation there. It was in Disney World, but it was a business trip. But it wasn't a vacation. So it just depends where you're going.
Got it. Thank you. So why does the IRS care so much about travel and meals?
Because people abuse it and they try to get away with things. And the IRS wants you to take expenses that are ordinary and necessary that are used to generate income as opposed to someone trying to write off their lives.
Do you think that I feel like that's a phrase that I hear quite often or see quite often when I'm looking at these tax documents is ordinary and necessary. Does that just mean it would be part of your everyday business?
Yeah, meaning that it's something that would be a standard in your industry. It's specific for example, being in my industry, I'm required to take continuing education. So for me, having these as expenses and traveling to seminars would be ordinary and necessary. It's common and an absolute requirement in my industry to keep my license.
Got it. Are there any ceilings for deductions, like any max amount that you can take?
It's dependent. Some equipment, there are some ceilings if you're going to take accelerated depreciation. But just in general, the more you take, the lower your profitability percentage. Likelihood that more likely than not, that someone may ask a question. So, I always advise people, especially if we're freelancers just starting, where expenses may outpace our revenues, and that's okay. But just make sure that you have, proof of your expenses in case someone asks a question.
Got it. So freelancers sometimes live in a different state from their client. Obviously, that's one of the great perks of freelancing. But then that seems like it could get really confusing, if your client is based in California, but you're based in New York and you're telecommuting and, are you paying New York taxes on the work? Are you paying California? What do you need to look out for?
It's a question of tax nexus. Where do you have a connection where you're doing the work? If you're physically in New York and you never set foot in California, you should not have a California tax obligation because you didn't earn the income there. However, we have an issue, as you know, where we're very close to New Jersey, and we have a lot of people that commute back and forth between the states. If I went to a client in New Jersey and did work, I would have to allocate some of my revenue and some of my profit in New Jersey and pay taxes in New Jersey as well as New York. So you have to keep track of where you're working.
Do you think it's best to hire a tax professional who is located in your state, or does it matter?
Well, I think the person should be aware of your issues. I mean, I'm aware of I have a lot of California tax returns I do. I'm very aware of the rules there in New York and New Jersey and Pennsylvania. I don't think the person necessarily needs to be down the block, but I think especially in higher tax urban environments, the person should be aware of the state and local laws. That's where the real differences are between states.
And if your client is in another state, and again, it's that issue of they didn't send a 1099, do you is there some way of contacting that state to let them know that the client didn't send that? Is that not how it works?
I mean, that's their headache. Bottom line, that's their problem. If they don't follow 1099, it's not your responsibility, it's theirs. But it's our responsibility to report the income. So as long as we're reporting it properly, we shouldn't have a problem.
Okay. So we get many members who also have a lot of questions about sales tax. And I think that follows the conversation about working in, state to state, because states have different regulations around sales tax. I know that you're an expert here in New York, specifically a little bit New Jersey. So, not that I'm going to ask you to speak about sales tax laws in all the states or California, but let's just talk here in New York. And if you know nationally, what are some of the general must watch out for things about sales tax?
Well, bottom line is, if you're selling a product or service, regardless of whichever state you're in, you should know whether or not that product or service is subject to sales tax. And if so, you should register prior to selling that product or service. For example, in New York, most goods the default is it's subject to tax unless it's exempt. And for services, which a lot of us perform, it's exempt from tax unless specifically identified. For example, haircuts in New York City are subject to the New York City portion of sales tax. That's an example of that. But CPA services are not. They're not subject to sales tax. Selling clothing in our state is subject to sales tax, but there's an exemption under $110. Selling most food, and that's a big deal because I've seen more craft type of foods coming up, are subject to sales tax unless it's baked goods. So if you bake gourmet potato chips, it's not subject to sales tax, but bottled water is. So you really got to know the rules. It can be really, really, really very, very exacting depending upon each SKU, each item that you're selling. So I would say get a wrap on it very, very quickly. Make friends with a CPA who knows your jurisdiction. Just keep out of trouble, because I've noticed an uptake in sales tax audits. The states are getting much more aggressive on collecting on these things. As more and more things are going online and states are getting more and more reports, 1099Ks and other things, they know more about what people are doing. One of the days we can just fly under the radar.
Wow. Is there a certain percentage of sales tax that applies to certain types of goods? It sounds like it's all very confusing.
Yeah, it is very confusing. I mean, if you're selling nationwide, there are some, I guess people can email me, there are some online applications that can help to keep track of all this. But yeah, it's a big, big effort to stay in compliance. And if you have a sales tax, it can be a very expensive proposition. I've represented people in sales tax where we've been dealing with thousands of dollars in dispute.
So is that what happens if you haven't been applying sales tax and you're now listening and realizing that maybe this is something you need to look into?
Get some help. It's not something to tread lightly on. Some states have some amnesties that if you come in ahead of time and profess your sins, you can get waiver and some penalties. Definitely get some help. It's not something to do it on yourself.
Okay. We're going to move on to the topic of incorporation. I think that first and foremost, the first sort of newbie freelancer confusing thing is sole proprietorship. Is that something I have to sign up for? How do I file for that? Let's go back to that newbie in your office scenario. What do you tell them about becoming a sole proprietor?
That's what you are by default. It's not a legal entity. That's just a category that you're in. In some states, especially in the West Coast, you may need to register for a business license before you begin the freelance activity. So that's something, especially for our West Coast friends, that they may want to take into consideration. But that's your default. It's not an entity. The next thing I usually get asked is, what is the DBA? It's a legal nickname. It's like Medows CPA, which my DBA is CPA for freelancers. It's doing business as. For example, it's a legal nickname. Then from there, but that doesn't give you legal protection either. It doesn't. Pretty much both of those things are just a status. You have personal liability. When you form entities, that's where you can start to mitigate some of your financial risk and or do some more advanced tax planning that being incorporated may help you to either mitigate your risk and or to save in taxes and or for non-financial reasons such as branding or for other reasons that people may have for forming entities.
Well, let's take one step back. What are some of the legal issues that might arise if you're a sole proprietor versus being incorporated?
So you do a project, something goes wrong, they sue you. They're going to sue you personally and go after your assets. Someone comes, you have a real office, someone comes in and trips. You don't have insurance. You didn't incorporate. Someone may be able to go after you. On and on and on. I'm not an attorney, but these are type of things, the reason why people look into incorporating.
And if you have from the start done that separation, as we were saying, of business and personal finances, will that protect your personal finances if you find yourself being...
Not if you're not incorporated. Doesn't matter.
So that separation is very helpful for filing your taxes and just keeping track of everything. But if it comes down to a legal issue, that's not really protecting you.
If you incorporate, it will. But if you don't, it won't.
So now, okay, there's a insurance benefit to incorporating. There's a legal benefit to incorporating. Is there any problem apart from, maybe if you happen to get sued, is there any real problem that you see with being a sole proprietor? Like, does it hurt you when you do your taxes more so than if you were incorporated?
It depends upon the circumstances. For example, I have certain clients that we formed LLCs and or corporations for some retirement planning reasons. There were some advantageous things that we can take advantage of by them being formed as some sort of business entity type. There's some tax savings that we may be able to take advantage of. Again, it's all specific upon your jurisdiction where you live. Sometimes it's a disadvantage as well. Sometimes I have clients that frankly just incorporate because they just want this stuff off their personal tax returns. They want to get a W-2. They want it to look clear. They want to go to the bank. They want to get a loan. They don't want to involve their business into their personal financial affairs.
That makes sense. Are there any structures that maybe are better for some types of workers over others? Like, is one type better for freelance writers and journalists?
Not so much for professions. I mean, obviously, if you're a licensed professional, like an accountant or a lawyer or a physician, you may have certain legal restrictions on type of entities that you can structure and form. But usually I would say my structuring, at least for our practice, is really driven by state and local taxes. So the advice that I would give someone in New York City, where, as you know, Sharon, we have a lot of local business taxes, may be different than I would give someone outside of New York City or living in Florida. So it's just really it's usually state and local tax driven.
Thanks. What about saving for the future? I mean, it's hard enough to save and pay quarterly taxes, right? So how do you then account for what you want to put into an IRA, say? Or is it just better to keep that money in the bank just in case your quarterly taxes surprise you, or you didn't have enough work the past 3 months and you weren't expecting that?
Yeah, I mean, you touch on a good point. In addition to making money, we also have to save money. We have to save money for retirement, but we also have to save money for a rainy day. Things happen sometimes, things slow down. And also sometimes we have to save money for the future, getting married, having children, buying a home. So you need to divide it into multiple buckets, but then again, you also have to be realistic with yourself. I mean, some freelancers, the question is really, can you make it working for yourself? Because as you know, there are higher tax burdens working for yourself. And then we also bear the responsibility of overhead of working for ourselves. So if you get paid 80 grand, it isn't 80 grand. You have an extra 7.65% for federal taxes because of self-employment tax that you need to match. Then you also have the overhead of running your own business. The question is, at the end of the day, are you better off working for someone or not? You have to make more money to be a freelancer, just to be even in comparison to working for someone else. And you also didn't touch about buying health insurance, which is a very expensive expense in this country these days.
That actually does lead me into our next segment, which is, questions about health insurance. First and foremost, if I have health insurance all of last year, and then, because maybe I was working part-time for, as a W-2 employee. Well, actually, sorry, let me rephrase. Say I'm working part-time as a W-2 employee. Is there anything I need to to do in terms of saving or filing for my freelance life? What if I'm thinking of moving into full-time freelance in the future?
I think what you need to do is clearly delineate your freelance life and your W-2 life. I've been there myself where I've had a freelance job and a full-time job, and I kept the two apart. However, as you know, under the ACA, you're required to have health care and coverage now. Otherwise, you'll be subject to a penalty. So it's really important for freelancers to look into this. It's 2.5% in 2016, up from 2% for the penalty if you don't have health insurance. It's starting to get very expensive for not having insurance. In previous years, some of my freelancers said, I'll just take the 1% penalty, which was in 2000 on 2014's tax returns. But given that these penalties are moving up and up and up, it's starting to come at a point where you really have to look into seriously getting some health insurance.
What about other major life changes? Like I get married. How does that change the way that I'm filing my taxes as a freelancer?
So once you get married, you can no longer file a single. You either have to file a joint return with your spouse and or separate returns. There are different tax rates. Usually, most of my freelancers come in as a surprise of something called a marriage penalty, where your deductions are not as robust as if you were single. So there's some financial planning that needs to be taken into account as well.
So I think one thing that happens quite often is that there is this mix of worlds where possibly I'm working, part-time as a W-2 employee, and then I'm freelancing part-time. First question, I suppose, is what do I need to do to prepare to launch my full-time freelance career?
Hoard money, that's number one. Number two, being able to get clients, the silver bullet. I see so many people that start out but just can't answer the question of how they're going to monetize it. So I would say start out with that as your first proposition. How am I going to make money? And then worried about building up the infrastructure. Don't spend a lot of money at the get-go. Work from home, get a laptop. Don't go crazy in the expenses as you go, grow. Those are my strong points. But it's going to come at a point where, especially when you're freelancing part-time and working full-time, where you're going to have to let go of that safety net of working part-time with that W-2, and you're going to go backwards a little bit to go forwards. I've been there. I've done it. I had free jobs at one point while I was going to school full-time. So I've been there. I know what it is. It's extremely scary to do it, but you got to make that leap of faith, but hopefully with some systematic planning in part. But yeah, you're gonna have to go backwards to go forward. This country is a constant reinvestment in ourselves and a re-engineering and a regrowth of ourselves, and we're constantly changing and evolving along with the marketplace. And that means going forwards to go backwards a lot of times, especially when we're starting out, and reinvesting. I always have a VAR practice where every year I spend so much money on marketing and technology build and training and hiring new people. It's a constant reinvestment. So you're always going to be at the part where you're going to have to take some money and put it back into the business.
Following along that same scenario line, if I have been working part-time and freelancing part-time, and because of that, I haven't been separating my personal and business finances. What should be done? Do I just need to change that as soon as possible?
Be as soon as possible. Get an app, especially like some of these apps that are great out there, like the Zero Tax app, Tax Touch that I mentioned, or something else, where you can download all your expenses. You can swipe left, right to accept, left to reject. That will help you quickly clean up your mix of business and personal use. That's number one for get-go. Number two, see if you're ahead of the game and start making some estimated tax payments. First quarterly payment is coming up April 18th this year, in the Northeast at least, because of holidays, for filing your taxes and estimated taxes. I think getting in gear now for 2016 season is definitely the first thing you can do. It's the beginning of the year. It's easy to clean up. We're at March 17th. Only two and a half months to clean up. So I'd say be proactive now about 16.
So it is the first filing date of 2016 coming up. Are there any important things that people need to know about changes in tax codes or anything that's different this year from the usual?
It's more of the same. I think the BCA was a big change for us 2 years ago, and those penalties are ratcheting up and increasing. That's the only major thing that I've seen, is just that's going up. Other than that, pretty much same old, same old. You're still able to take business expenses as a deduction. You're still able to take mortgage interest and real estate taxes and charitable expenses. IRAs are something that I think that are really good, and maybe as we're beginning of the year, get into best practices, setting aside money for taxes, and most importantly, setting aside money for a rainy day and for retirement. Getting to those best habits, I think. But in terms of changes, nothing dramatic. I mean, we'll see what the election brings, but even then, I don't think anything will change in 2016.
Okay. So we're going to get into a couple of member questions in just a second. But before we do, is there anything that you think we've missed? Any big things that before a client walks out the door, you want them to know or remember?
No, I think we've touched on it. I'll just summarize it a little bit. Big picture. When we work for ourselves, we are paying in. We don't get money back. The question is how little or how much we're going to have to pay in over the course of the year. The only other thing that I think we didn't touch on, now that you mentioned it, is really knowing what you can take as a deduction, specifically when we're in startup, meaning we have a product or an idea. We haven't launched it yet. We're not selling it. There's some limitations on what can be deducted. So just because you have an app and you spend $100,000, you may not be able to take it all off as a deduction. You need to start monetizing it to be able to claim the expense.
Okay, thank you, Jonathan. We are going to move into a couple of member questions now. People are live in the chat room and on Twitter. They're sending us questions. I won't trick you with a question about Alaska. We will either stick to generalized questions or all things that you can answer. One interesting question that popped up that we actually did miss is about the items that you buy when you start your freelance business. If I buy a new laptop for my business, for instance, maybe I'm a developer, can I deduct the cost of that laptop as soon as I buy it?
Specifically, if computers are long-lived assets, and you may not be able to fully deduct it. There's a question of whether, if you're profitable, yes, you should be able to under accelerated depreciation, section 179 for those into the details. However, if not, you may not be able to fully deduct it in 1 year. Smaller expenses, yes, you should be able to.
Okay.
Same as furniture as well. Bigger the expense, the less likely you're able to deduct it in 1 year.
So we have a question about reducing tax burden. Any practical ways to do this?
IRAs, SEP IRAs, Roth 401ks, 401ks. Roth is not tax deductible, but look, retirement savings, I think, especially if you're going to do it on a tax deferred basis, may bring down those brackets. But when you retire, you're going to pay taxes in those amounts. You're deferring it. It's not tax exempt. And then for those making a lot of money, maybe municipal bonds as a source of investment, they can be tax-free on the interest and dividends.
This question is from Nicole. She's wondering, where should I keep my estimated tax payment until I'm ready to pay? What type of account is best?
An account where you won't spend the money.
Fair enough. Question from Rachel. Do we need to file a yearly tax in addition to the quarterly taxes?
Yes. You pay the government on a quarterly basis. You merely remit the money. If you're doing it by check, you remit a piece of paper. And at year end, you account for all your revenues and expenses. And that's the annual tax return.
Okay, so Jonathan, can you just review one more time? What are the 4 points in the year when freelancers are paying taxes?
April 15th, June 15th, September 15th, January 15th. Even if you paid every single dime that you think you owe, you're still under an obligation to file an annual income tax return.
And that's at the end of the year?
And that's by April 15th, unless you ask for an extension. Assuming we're talking about a personal tax return, that would be due October 15th or a couple of days later if the 15th falls out on a weekend.
Got it. Question from Allison. This speaks to what we were talking about very clearly. Last year, I worked freelance part-time and had a full-time job. I received a W-2. This year, I expect to have only freelance income. How do I estimate my quarterly taxes if my wages from last year are if from last year's freelance income is so much smaller than what I anticipate it to be this year?
So bottom line, if you're using a piece of software or doing it by hand, you can adjust your estimated taxes to reflect your 16 income. However, keep in mind that when you're self-employed, your tax burden goes up because of self-employment taxes. What that is when you work for someone, you pay 7.65% for Social Security and Medicare taxes, and your employer pays a matching portion. When you work for yourself, you pay both ends. So if assuming a freelancer makes $50,000 on a W-2 and $50,000 profit being self-employed, the tax burden is going to be higher being self-employed because of self-employment taxes. So you need to factor that in for estimated taxes. In addition, depending upon, you have to factor in for state taxes and or state and local business taxes, because some state and local municipalities charge you a tax on business profits as well.
Yeah, that's something that we hear a lot of, not complaints, but worries about, is that double taxation. People feel that's not necessarily free to freelancers, or sorry, fair to freelancers.
It is. I mean, I know in New York City, I know the Freelancers Union has campaigned to raise the unincorporated business tax because it's unfair to freelancers, and I think you guys should launch another campaign because the city is nibbling at the deductions and exemptions. It absolutely is, or double tax. We're taxed once as a business for making money, and then we come back to our personal taxes, we're paying the same tax again as a personal income tax. Absolutely, it's unfair. At least in New York City, we get a little bit of a tax credit, but it's a drop in the bucket. We're getting paid taxed twice on the same thing.
I have to start rallying the troops to take it to city government.
Exactly.
So this is an interesting one. This goes back to the legal entity formation question, but with a new twist, which is that Tiffany's clients are mostly international. So she's wondering what the best tax structure is when she has mostly international clients.
That's a very vague question. I tell her to consult with both an attorney and a CPA. The attorney will give legal advice, and the CPA would give you tax advice. You definitely need some help on that one.
Do you have any advice you could give to freelancers who are working with international clients in terms of how that might affect their day-to-day, or how that might affect the way that they are paying taxes?
You'll have to report your taxes regardless of whether your source of income is domestic or international. However, you have to be careful that you don't have a tax exposure in the foreign country that's paying you.
Right, because they're probably not sending you a 1099.
Right, but Germany or France, if they may be reporting something there, all of a sudden, you may get a bill from the French government saying you owe taxes.
Yeah, okay. A few questions on quarterly taxes from Taryn. Do quarterly payments have to be equal,
No.
or can you pay different percentages based on what you earned?
Sure, great question, Terrence. I mean, yeah, you can pay different percentages. I know myself, just in the nature of our business, the first 2 quarters of the year, I earn more than the last 2 quarters, and I pay as I go, where I will just, my first 2 quarters are heavier numbers to reflect our cash flows, and then 3rd and 4th quarter are lighter. So absolutely you can. If anything, I'd encourage you to pay more money ahead of time, just to be a little bit more on the conservative side so you don't spend it.
And what if you didn't realize that you have to pay quarterly taxes and you missed the April deadline? What do you do
in June? Pay more money in June.
Pay more money in June.
Pay more money in June.
Okay. Let me see. I'm a W-2 employee, but I also freelance. This is from Pat. Can I deduct what I pay for health insurance? A W-2 employee, but I also freelance. Can I deduct what I pay?
Possibly yes. Possibly yes. I definitely speak with someone, but yes, more likely than not, you may be able to take it as a deduction.
I think the answer for our audience, no matter what Jonathan says, is that everyone please go out and get that professional help and advice, because it's only going to benefit you in the end.
But, you know, now that you mention it, Sharon, I'll add in a word for my fellow tax professionals out there. Trying to establish a relationship now is just very difficult, because anyone who's decent is probably very busy and really can't answer questions for newbies looking for free advice. So, you know, if you want help of a professional, show him or her the respect. This is the time of year where a lot of tax professionals are very busy, and financially, this is the time of year where they make most of their money. A lot of them will be very nice and help you. May, June, July, they may not even charge for consultations. But if you come in now asking for free advice, you're going to be surprised that you may not be able to find the help you need. So my advice is establish a relationship earlier than not, but bear in mind that the people that you're reaching out to may also have other obligations.
Do you think there are some tips you can give for what to look for in a tax professional?
Sure. So my first thing is, maybe I'm a little bit snobbish. I always want someone who's licensed. If someone is cavalier not to get licensed in their own industry or profession, that's a red flag for me. My other area is make sure they're aware of state and local taxes for the tax returns that they're preparing. Thirdly, make sure they understand the industry that you're working in. You know, recommendations are always good. Friends use them. And I know they're honest people, they stand up people. Because inevitably, you know, something's going to come up, and the question is, you know, will they help you? Will they not help you? Again, there's time and place for everything. You know, they may need to punt for a couple of weeks if they're extremely busy, but will they sit down and take care of you at the end of the day? But bear in mind, you got to pay for these things. You know, the biggest issue that I hear complaints from a lot of my lawyer and CPA friends are people coming in without having an expectation to pay for time. This is how we earn our living, and you have to have an expectation of paying for time, just as you guys as freelancers as well have an expectation to get paid for your time.
Yeah, absolutely. So we have about 5-ish more minutes, and then we're just going to wrap it up. So I think that'll account for a couple more questions from our audience. This one comes from Alec. He's wondering, do bank statements work as proof for deductions?
No. Keep original receipts or copies of them. If you were to be audited, the burden of proof is on you to show that they were business related. It won't work. You're never going to have 100% of your receipts, but the more you have, the better likely than not. But no, nor will credit cards by themselves be sufficient proof.
Is keeping pictures of receipts okay?
Yeah, there are apps that you can take pictures and keep track of receipts. Absolutely. I just scan them. I mean, I have binders where I put our own receipts on a daily basis. Some people also put them into category types. But yeah, I definitely would have something, whether it's an image of it and or the original receipt in case of a question. You need to hold on to it for 3 years.
Yeah, I think that's a really good question, is what is the best amount of time to keep track of all of those things?
Well, 3 is a technical answer, but I'm a cynic, because the IRS can assert a claim of fraud, in which case they have 6 years to go after you. So 3 at a minimum, but 6 is best.
It's funny, I just got a question that said, can you switch the screen to Jonathan? I'm sorry, everyone. I think I must have accidentally kept it on myself for a while there. So let's see, time for a couple more questions. What happens if you overpay? That's a great question.
You get money back. It's okay. They'll give you the money back. You don't lose it if you overpay.
You don't lose it if you overpay, but when do you get that money back?
April, when you file your tax returns, or before if you file earlier. Or you may want to roll it for next year. A lot of my clients will roll it. This way they get off to a good start by having some money already in for estimated taxes.
Are there benefits for freelancers who do service for nonprofits?
Great question. So I get this asked question all the time. You can't deduct your hypothetical billing rate as a tax deduction. I used to be treasurer of a synagogue, and I could never deduct my theoretical billing rate for the time that I put into this. I spent some money, some out-of-pocket expenses, and I took it as a charitable deduction. I bought some envelopes once, had them printed. Instead of asking for reimbursement, I took it as a deduction. But you cannot take off your hypothetical time as a deduction. Do good work because it's the right thing to do, not because you're saving on taxes.
So I just want to remind everyone who's watching and who will watch in the future that we have a really great tax resource center on our website. And Jonathan has helped us to prepare a lot of those resources. And in addition, writes a lot of great articles on our blog. The Tax Resource Center is available at freelancersunion.org/resources. Jonathan, why don't you take a moment here to tell everyone how they can get in touch with you, what's available on your website, that sort of thing.
Thank you so much. I really appreciate that. So we can be contacted at cpaforfreelancers.com. You can email me at cpaforfreelancers.com. On our website, we have this great blog that we've been putting a lot of time and energy into with articles, some that have been initially appear in the Freelancers Union, some original material as well. We've been putting out articles about 2 to 3 times a week during tax season. In addition, we have a listing of our team members as well as the type of services we provide. If someone's interested in contacting us, we'd be more than happy to entertain this. And yeah, I look forward to hearing from everyone.
Great. If anyone has any questions, obviously it's a very busy season for Jonathan, but I guess you can contact him. And you can also contact us. We are available at events@freelancersunion.org. Again, Freelancers Union is completely free to join, so tell your friends that we have great resources for freelancers. We have great events. We have an in-person event coming up called Spark. It happens every month across the country in 22 different cities. So you get to meet freelancers and talk about how to improve your business. And you can learn more about that at freelancersunion.org/spark. This webinar is being recorded and will be available after the fact, both to everyone who RSVP'd and to every one of our members. And that will be going live on our website very soon. We will email you as soon as it does. Thank you everyone for joining. Thank you, Jonathan, and good luck to everyone out there. As soon as April 18th comes around, you can breathe that big sigh of relief.
Happy Tax Day.
Bye.
Bye.